Good morning, everyone, and TGI Friday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back and thank you all so much for being here. We have made it to the end of the week. This morning we'll be taking a look at exciting stock market news, notable earnings reports, and the morning's biggest gainers and losers. Don't forget that TipRanks premium subscriptions are now available on a monthly basis, so if you've been considering unlocking some fantastic research tools, now is a great time to do so. Let's jump right into this morning's exciting stock market news. U.S. stock futures are in the red this morning as investors react to minutes from the Federal Reserve's July meeting, where it said that interest rate hikes may spark a recession in the U.S. Right now, the Dow futures are down 0.8%, S&P 500 futures down 0.95%, and NASDAQ futures down 1.04%. Following the stock market is popular cryptocurrency Bitcoin, who's now fallen over 8%. After hitting $25,000 for the first time in June just last week, Bitcoin is now at $21,411. In more red news, unfortunately, Bed Bath & Beyond is plummeting this morning after Ryan Cohen's investment firm RC Ventures has sold off its entire stake in the company. Following what seemed to be another meme-fueled rally for the stock earlier this week, RC Ventures disclosed with the SEC that they no longer own any Bed Bath & Beyond stock and have sold $178 million worth of the company. Cohen had first revealed his position in Bed Bath & Beyond back in March, saying that they would help refocus their strategy among other requests, and reached a deal for 3 board seats as well. Currently, the Bed Bath & Beyond stock is rated a strong sell with an average downside of 77%. Investment management company BlackRock has launched a new ETF that focuses on fintech companies. It's called the BlackRock Future Financial and Technology ETF. It will trade under the ticker name BBBY. They believe that the next phase of fintech growth is just around the corner, and this new ETF will invest in companies across the globe that are delivering innovative and emerging technologies in the financial services domain. The fund is an expansion of the company's Megatrends platform, with this being their 6th active ETF. Analysts currently rate the stock a strong buy, but they've already surpassed price targets and currently have a downside of over 4%. Now moving over to notable earnings reports. Shares of Foot Locker are soaring this morning, up over 18% following better than expected earnings results and naming a new CEO. On sales of $2.07 billion, they reported adjusted earnings of $1.10, higher than the analyst estimated 80 cents per share. For their fiscal year, they are expecting that the results will be at the lower end of their range previously cited due to broader market conditions, but their guidance is still better than some of the forecast reductions made by many other retailers. And with their CEO Richard Johnson retiring, former Ulta Beauty CEO Mary Dillon will take over his role in September. The stock is currently rated a hold with an average downside of 6.8%. Missing analyst expectations and slightly cutting their future guidance, we had John Deere also report this morning. Their earnings fell short, coming in at $6.16 per share, nearly 50 cents lower than the estimates of $6.64. Revenue did grow over 22% year over year, coming in at $14.1 billion ahead of analyst estimates. Their full-year earnings guidance was trimmed back slightly from the prior $7.2 billion down to $7.1 billion. Analysts do currently rate the stock a moderate buy with an average upside of 6.3%. And last night we heard from Bill.com. Their stock is on the rise, up over 18% after they had better than expected earnings. Bill.com processed over 10.5 million transactions in Q4, growing 28% year over year. They reported an adjusted loss of 3 cents per share, narrower than the estimated loss of 14 cents. Revenue of $200.22 million advanced a huge 156% year over year and beat estimates by $17 million. Analysts rate the stock a unanimous strong buy with an average upside of 40%. Now let's see which stocks are the morning's biggest gainers and losers, though I do think we've talked about most of them already. Our biggest gainers are led by Foot Locker following their earnings results. Trading under the ticker FL, the stock is now up over 20%. They're followed by Bill.com Holdings under the ticker BILL. They're currently up just shy of 17%. And Taylor Morrison under TMHC up 9.5%. Our biggest losers this morning are led by StoneCo. Now, I'm going to address the fact that it's not Bed Bath & Beyond, despite them plummeting huge, but this list just looks at companies with a market cap over $2 billion, which Bed Bath & Beyond is just shy of. So, StoneCo is following their Q3 earnings report and the news that their CFO is leaving the company. Trading under the ticker STNE, the stock is down nearly 11%. They're followed by MicroStrategy under MSTR, down 9.9%, and GameStop under the ticker GME, down 9%. So that is going to be everything for Friday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. Thank you guys so much for watching. I hope you have a fantastic weekend, and I'll see you back here on Monday.